Hey YouTube, how you doing? Welcome to the Ways 127 broadcast. Hope all is well. We're going to go into some stuff today. Instagram, what's going on, folks? I can just put this down because I know that's working. So yeah, let's go into it. So today, I think some of you saw the stock market and a few specific stocks went ham today. What we want to do is kind of go over the reasons as to why that happened and then talk about positioning. Because again, for me, in 2021, what I've realized is that a lot of folks that make a lot of money, they don't really talk to you about how to position your stocks and position your portfolio to actually have an entry and an exit. So we've talked about savings. We've talked about paying down your debt. We've talked about financial literacy aspects when it comes to your own personal finance, treating yourself like a business, making sure that you have your own balance sheet, your income statement. You know exactly what you're bringing in, what you're expending out for expenses. Knowing yourself and your situation, that is the first step of financial anything, right? So we've talked about that. But today we're going to talk about strategy and market volatility. Like this year is going to be volatile as heck. And one of the reasons why is simply because it just has to be. As things change, as society moves from one chapter to another, it usually leads in with volatility. And after any presidency, you'll usually see that when there's a changeover of positioning when it comes to Democrats or Republicans, Republicans, Democrat, there is usually a change when it comes to the market. Whether it goes up or goes down, you're going to see something drastic happen. And today was a perfect example. What's going on? Revolution Knows what's going on. So you're going to see all of this today. So let's go into it right now. If you're on our YouTube, you can follow us here. I'm going to go to our first window and pull up what the hell happened, right? Let's go right now. So, where we normally go, finance.yahoo.com. And we're going to go straight into AMC first and foremost, right? So for everyone who knows us, knows that we go into these things and we talk about them directly because we have to, right? So AMC today, let's get right into the skinny. AMC was up 301% today. Okay? I didn't make that up. I'm not pretending. That's actually, hey, I'm Bev, what's up? This is what happened today. And there's a reason why that happened, and we're going to talk about that. But I think the most important is understanding the strategy behind when to enter and when to exit that position, right? So for anybody who has AMC stock right now, which is some of you on this live, some of you don't have it, is it still a good position to have or to take right now, right? So a lot of folks have, the fear of missing out, right? FOMO, they call it. And it's like, okay, we've already seen it go 300%. How much higher can it go? Maybe we shouldn't, deal with AMC. Well, the way that we do things is, granted, if you were in this position to begin with, yes, you made a lot of money today. Cool. For all those who didn't get into AMC today, we're going to do what we normally do. Let's go back 6 months. We're going to look at the chart. Okay. So back 6 months, AMC's high was $7. This is in the middle of the pandemic. Let's go back a little further. I want to go back at least 5 years because, again, AMC's been around for a long time. So let's get a really good mark as to what this company can do and has done, right? So at the beginning, before the pandemic, they were still losing a little bit. They were losing money, essentially, right? October down to November, they're losing money. Okay, cool. And in 2020, looks like they were down to $7. So AMC was already trading low, right? In our school of thinking when it comes to growth stocks and knowing that, during the pandemic, this is a good time to collect a lot of stocks that are low. AMC would be one of those stocks that I'd collect up. I mean, actually, one of my boys talked to us about AMC 3 weeks ago. He was like, hey, we should invest in AMC. What do you think about that? I'm like, I don't know. I'll get back to you, let you know. I wish I'd got back to him sooner. But at $7, $6, $5, and even as low as $2, where it was at in April of last year, AMC was really hemorrhaging, right? No one's going to the theaters. So granted, it's not going to be making a lot of income. However, now that we have a vaccine, now that we are dying to get out of our homes and go and go to a movie and enjoy, the things we used to enjoy, AMC actually, the way that they're set up is designed pretty well to actually take care of a COVID situation. Their seats are already spread apart, so you're not really sitting on top of somebody, and all they'd have to do is alternate seats, and they could still open up movie theaters because you get 6 feet apart from other people. So like they can actually pull this off, and they'll probably be one of the first theaters to actually do that. So just based on that alone, when they got down to $2.30 this year, January 11th, AMC was at $2.33, right? From a high of what? Earlier it was what, at $19, $12, $9, just decreasing. When it gets down to $2, at that point, that's kind of its lowest low. If you look at it, if you look at the chart and you literally look at this chart for 5 years, that was literally the lowest the stock has ever been. It's never been lower than that. And I think for me, when I see a stock get to a place, as long as it doesn't go bankrupt, which usually that indicates, when it gets to this lowest price point over the last 5 years, that's usually the best time to buy, but you'll never know when it reaches the lowest unless you know what the previous low was. So what I'll teach you all today is this. If you look at AMC stock, right, and you saw that it was hemorrhaging over the last year. So let's start from last year when the pandemic happened, February. Okay, it dropped from $7 down to $3.20. Okay, cool. It kind of fluctuated, but then it went back down to $4, fluctuated back up again. Then it went back down to $2.36. At that point, once it went below this previous low of $2.27, once it went past that, that would be my indicator to look at AMC. Because at that point, I know that now it's trading at almost its bottom for pricing. There's nowhere to go but up. Even if it only went up by $5, $2, that's still a huge gain on a $2 stock. So its previous low was let me pull it out. It was $2.27. Okay, that was its previous low on March 30th, 2020. That's as soon as the pandemic hit and everything got locked off. So anytime a stock reaches that price again, that is an indicator for you to think about buying it. Regardless of anything else happening, as long as the company stays in business, you can't really lose on a stock like that. And what I was going to tell my boy before this pumping and dumping happened was that we should definitely look at investing in AMC over the next 3 months, just as like a steady dollar cost averaging in, because it's going to be a stock it's going to be bouncing up. Right now it's at one of its lowest lows, $2. You can't really lose on a stock like that. But for what happened, and I want to tell you why this happened. So the reason why AMC blew up the way that it did was two things. None based on its actual selling of movie tickets. It wasn't because we had access to AMC theaters and we're watching movies out of there. It wasn't because of what AMC did. It was an external factor that determined why AMC rose 300%. Literally, hedge funds specifically, they short a lot of stocks. Let me wave at the people. Rob, what's up? Ogu, what's up? Lovely, how you doing? Hey, Dom. Tice, what up? Mikey, what's going on, sir? Toya? All right. I think we caught everybody. Janelle, I caught you. Bulden, what's going on? All right. So hedge funds typically short stocks that they see are going to be, losing value because of things like the pandemic. That's how they make a ton of money. Hedge funds are used to making well above the market returns year on year. Why? Because they're banking on things going down and they're driving those prices down. They're banking on things going up and they're driving the prices up. They drive prices in whatever direction they want because they have a lot of capital that is getting invested into these stocks and onto the options. So what happened with this was hedge funds bet that AMC was going to continue to go down because they were getting close to bankruptcy. They really were. And because of social media and a certain Reddit page, folks started buying AMC stock by the masses. And that started popping the shorts on AMC. Now, what that means is this. In every transaction, when it comes to options, someone's betting that the market's going to go up with the stock price, or someone's betting and someone's going to bet that it's going to go down with the stock price, right? There's two people at that transaction for an option. Whoever is right gets exponential gain. Whoever is wrong gets exponential loss. Which is why if you want to play options, you're playing with, it's a high stakes investment. However, if you win big. If you lose, you also lose big. And when hedge funds lose big, you see things like what happened today. That 300% profit is not natural. That is not a common occurrence in the stock market when it comes from our side. Normally, hedge funds don't have to get bailed out because they made the wrong bet. Usually their bets are on point, and ours are the ones that have to get bailed out. And this is one of the first times that I've seen the opposite happen, which is this, again, a part of what we talked about last week and the week before. We said that 2021 is going to be stuck with volatility, period, full stop. There's going to be a ton of volatility this year. And I want all of you to know that it doesn't matter what the market does. What matters is your strategy and understanding what you're buying, when to get in, when to get out. Very plain and simple, right? And you can't always hit it perfectly. So what I'm going to talk to you about today is when to get in. Okay. So with a stock, and I'll go back to our regular screen here. With any stock, the best time to get into any stock is when it's nearing a low. Sometimes you get blessed where, there's some sort of news cycle, data breach, something else that happens where the stock price can drop by 10%, 15%, 20% in one day, even as much as 50% within a month, right? That is the first indicator that I look for when it comes to stocks that I want to invest in and take money from the gain side. So let's say, for example, the pandemic happened. There's a few stocks that we can show you that did this, where the pandemic happened and everyone saw that we were closing down, everything's getting shut down, and the stock prices for a lot of things dropped and fell. Well, if it dropped and fell by 50% or more, okay, that just means that at some point in time, as long as the conditions, go back to normal, you're going to be able to make 50% profit on whatever that stock was if the operations of the company did not change. All right. So for example, we're looking at AMC right now. So AMC before the pandemic hit was trading at around, March. It was trading around January of 2020, $6. That's where it was trading around, right? So last year before the pandemic hit, they were trading at $6, which means that it's plausible to think if the price falls to $2.30, that price can triple if we buy in at 230, right? So as that price is continuing to fall during the pandemic, all I'm going to do is wait for the conditions to adjust. We start getting lockdowns less frequently. The vaccines are working. Folks are rolling out of their houses. AMC puts together some type of implementation to have folks view movies at a half capacity, whatever it is. Once those things happen, stocks usually tend to rebound to their previous COVID normal trading levels, right? So AMC would have been a good buy just based on that alone. If it was at 230, which it was before this thing happened, and you bought in at AMC hoping that by the next 6 to 12 months, you make $6, that's a very reasonable assumption to make. I would make that assumption. I was actually willing to make that assumption in about 4 days with my guys. Like, hey, let's look at this. Let's do that. But now where it's at right now, I wouldn't jump into this now. And the reason why is not because it's not going to make more money. It will. But what's happening with this stock price is that it's being pumped up artificially. And as you know, with artificial things, at some point that's going to correct. So it may not lose all of its gain, but I don't want to be involved in a stock that's being pumped for reasons that have nothing to do with the actual company's performance. That to me is dangerous playing, and that's when it becomes gambling. So for an AMC position right now, I know that, even if we take one, it wouldn't be as much of a position as we could have afforded, 2 days ago. But I would assume that AMC is going to return back to its maybe $25, $30 rate, at some point down the road. And I don't think that $5 on a $19 investment is worth it to me. I'd rather get $2 to 19 as opposed to 19 to 24. That's just not the kind of growth I want right now. Knowing that the market's going to be volatile, it's time for us to really start looking at investments that are going to give us a huge pop, just like what AMC did. And there are a few that have done that so far. So if you guys have been following us, we've given you some stocks that have actually done really, really well. And I'm going to call out one of them right now. This is a stock that we talked about probably 3 weeks ago. And we've talked to folks in Clubhouse about it. And let's just kind of go into this stock real quick. All right. So this stock, if you're following us on YouTube, you can see my screen. So for those who aren't on Instagram, that's fine. I'm talking to you guys straight up. But if you're on the YouTube channel, you'll be able to see the screen that I'm looking at. All right. So OEG is a company that I like because I had researched them when they were CUI back in Europe and doing what they were doing really well. And now that they are over here stateside, I am looking at what they've been doing. So let's look at 6 months. Okay. So 6 months chart, back in August of last year, OEG was trading at 57 cents, right? And this is why I'm saying that I'm not interested in buying an AMC now, as opposed to when it was $2.30. So OEG was trading at 57 cents back in August, right? And we collected some shares at that level. Obviously, 57 cents, can't go wrong with that, because, again, it's a company that is set in renewable energy. So it uses biofuels to create electricity. for power plants and water filtration centers. So water processing centers. So it really is green energy that helps power water authorities, right? That's what it did in the UK. Came over to the States, and it bought a company called Orbital, and acquired its solar, wind, and other green technologies, as well as their biofuel technology as well. So they acquired that company, consolidated it, came out with a new name. OEG is now the name. So when I saw them buying Orbital, right, I saw that as a power play because, you're in the middle of a pandemic and you're purchasing things. Always look at that as an indicator. If you see a company buying another company during a time where no one should be buying anything, chances are they're leveraging for something that's going to be good. Because again, you're playing high, it's high risk. You're not going to be, if you're a company that's about to go bankrupt, you're not going to go buy something. You're not. If you're a company that's ready to move to the next level, you're going to position yourself and buy other things that can help you move to the next level, which is exactly what CUI did when they bought Orbital. And now that stock price rose from 57 cents to $8.75 right now. And it's on the rise. This happened within the span of, December 18th up until, so basically a month. It's been a month. And this thing has gone from 50 something cents or $1.20 to up to $8.75. Now, the reason why I'm talking about this is because, again, when you're looking at entering and exiting on a stock, right? If I entered at $1 and now this made $8.75, I'm comfortable exiting this entire position right now. I've already made a killing off of this stock. It literally has gone up, 8 times its original value. That means that if you had $10,000 in there, your 10,000 is going to go up by 8 times, 80,000. So you're literally making 80 grand off of this one trade, right? Which goes to the point that I don't care if I'm right on one stock. As long as it's a good stock, I don't care. I don't need a diversified portfolio if I'm picking a stock that I know is going to do well based on the current conditions. Now, granted, what we saw with AMC and GameStop today shows you that regardless of what you want, there are external factors that can really kill your bet. However, as long as you're playing it for the long run, your bet is still safe, right? Folks who play the long run on GameStop are still safe. Folks who played AMC in the long run are still safe. Folks who play stocks for the long run, even when the market fluctuates up and down, if you were using our strategy with AMC specifically, right? And I'm going to go back to them on this chart so you guys can see why what we're talking about makes complete sense. AMC's chart, we have a strategy where we're buying stocks. If the market goes down, we buy 150% more. If it goes up, you just continue contributing whatever you're contributing every 2 weeks, right? So that's our strategy. Our strategy is that no matter what, we're going to buy the same amount of stocks over time consistently, right? So let's say someone saw this, last year and said, hey, AMC is going to bounce back. They're one of the best movie theaters, whatever. And they started buying stocks last year from January, right? Can I go back that far? Let me go back that far. 1 year from January, right? So you were buying AMC stock last year and you wanted to invest only $100 in AMC stock, period, right? Stock market's going up, it's going down, there's a pandemic, AMC prices is falling, they're not having profits, not having sales, but you're investing long-term. You're saying, I don't give a damn what's happening. AMC is a great movie theater. I prefer them over every other movie theater. Before the whole movie theater business fails, they'll be the last Mohican standing. I believe in this. Cool. I'm investing in their stock regardless. Let's say that's what you said, right? You're investing in AMC now in January. The stock price was $6. You're investing $100, so you're going to get that much of stock, right? For $6. Okay, cool. In February, it's $7. You're still investing $100. Fine. In March, it's $3. So now your investment, instead of you getting only 40, 50 shares, now you're getting 60 shares, right? So you're getting a lot more shares now because the price is so much lower. Okay, cool. Keep going. April, $2.41. Still buying. And this is the consistency that I want you to think about for a growth strategy. You do not need to see the stock winning every single day if you know that there's a long-term plan. If all you were betting on was that AMC went back to $5 or $6 or even $8, which is where it was prior to the pandemic, you would still make double your money on your May contribution because it was $4 at that point when you bought those shares. So if it jumps to $8, you've already doubled the money that you paid for those shares during that time. And this is why I want you to think about dollar costing into whatever stock you want right now, because every stock is depressed. All of them. I can list you stocks left, right, and center that are literally been depressed because, again, the pandemic is affecting companies from making revenue. This is the standard way of making money. What GameStop and AMC did today is not standard. There's nothing standard about that. But if you had invested on this basic premise, sometimes things like this happen. This is what happens when you're in the game and when you're actually invested. You have the opportunity for growth to happen. And I'll tell you a story. A close family friend of mine invested $200, $250 to be exact, on OEG, which I mentioned before, and Jumai, right? Just 2 stocks. That's it. This individual's account right now is over $2,000. They haven't put another dollar into it since. So from a $250 contribution, that has now grown to $2,000 and still climbing. Why? Because you could not lose on a stock that's going to grow from 57 cents. And that is the concept that I want you all to get hammered in for 2021. I don't want you to find companies that are 57 cents and just try to hit it big. No, I'm not a gambler. But what I'm saying is when you're consistently contributing to a stock that is raising in value because, again, all the indicators are matching and lining up, you're going to make money, whether it's today, next week, 10 years from now. You've got to invest for the future. Don't invest for right now. Like anyone that's investing with us right now, I'm letting them know it's a 5-year run. Over a 5-year period of time, I'm telling you that your stocks will increase as long as there's no Armageddon, the market doesn't crash, yada, 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 right? So today was a perfect example of something that can make the market crash. Knowing that AMC went up 300% today, literally is something that can make a market crash if it happens more than once. And now, this trend, you have to understand this. The reason why this happened was because someone was smart enough to look at who was shorting certain stocks and then crowdsourcing and saying, hey, Elon Musk, for example, GameStack or whatever he said. And then everyone that was crowdsourcing on that platform on Reddit said, okay, let's buy GameStop now. And let's look at them. GameStop. If you don't know about GameStop, that means you don't play video games. I'm sorry for your life. GameStop is amazing. So GameStop, look at what they did today. 134% profit today. Just because of a tweet. That's not normal. However, GameStop would have still seen a level of increase just because, again, video gaming has increased and people are buying PS5s, Xbox is coming out. There's a high demand for platforms. So it's something that you could invest in, but it would never have done this. It would never have done this without the Reddit tweet and without that crowdsourcing group knowing that there were a lot of hedge funds shorting this stock. So now let's look at the 1 year out chart. Do you see this? So GameStop, and again, when I say and this is what you can do for your kids, like imagine this, right? Let's say you had a kid that was maybe 10, 11, 12, and you wanted to introduce them into stocks and say, hey, you know what? You play a lot of video games. I'm going to buy you GameStop stock. And you know what? Every month we're going to spend $25 on GameStop stock for you, right? GameStop stock for you. You'd be buying those stocks at $3 a share, $4 a share, $2 a share for the last year. Just little, they don't cost a lot, right? And then think about what that kid's account would look like when the stock price goes from $3 all the way to $347. Like, that's why it's okay to invest in Disney stock for your kids. It's okay to invest in Nike. It's okay to buy things that they are interested in, the things that they like, because you know what? You never know what the market can do over time. And it's not going to hurt your pocket to show them that they're owning a part of a company. Like, that's actually what I want all of us to start thinking about for our kids. Let them become owners. And here's the thing. When things like this happen and you own and you're in a position of ownership, you're going to be able to take advantage of that. But if you're not playing the game or if you're not even invested in anything, well, you're not going to be able to take advantage of any of this. And one thing that I want everyone to know is that I want all of you to know that we're investing right now in one of the hottest capitalization markets ever, which is a small cap market. Small cap is anything below 10, well, small cap and middle caps, anything below 10 billion, right? I am 100% confident in that market. Reason why is because companies like GameStop, companies like AMC will be in that market and jump out into large caps now. I think all of these companies are now large cap, 24 billion. So GameStop just bounced out of middle cap. It's a large cap company now, just because of today. Its market cap is $24 billion. Remember, the cap is 10 billion. It's already gone. AMC, let's see where it is. I think it's probably obviously well out of that as well, just because of what happened today. And is it? Market cap 6.74 billion. So it's still a middle cap. So it hasn't grown to a large cap yet. But again, that market, that group of companies that are literally the ones that are in the next level, I am heavily invested in that market because I think that's the fastest growing segment. Just because, again, you can get a lot of gains in the small cap market that you won't get really in some large cap companies. If you think about it, look at Amazon, right? And let's pull them up. Amazon is going to grow very steadily over time. Today, they went down by 2%. So if you had a share of GameStop stock versus a share of Amazon stock, your GameStop could have made itself into an Amazon type of company profit in your account, right? By being up as many percentages. But look at Amazon. Over the last year, 1 year, steady. It just grows consistently. 2,000, 2,600, 2,700, 3,000, 31, 32, 31, 34. And now it's just kind of moving sideways, right? It's moving lateral. That's what that company is going to do. It's a large cap company. Large cap companies are so big that large movements in their progress is not going to make a very big difference on their price, typically. The bigger they are, the harder they are to make a profit off of when it comes to things like this. But, for me, when it comes to small caps, you're able to make killings from something that goes from $5 to $10. And remember, it's all about the percentage. It's not about how much the share costs. That's irrelevant. It's about the percentage gain that you had that day. So if you had one share of Amazon stock and it lost you 2%, as opposed to having one share of GameStop stock that gave you 100 and something percent, like the percentages are what matter. And if you invested $10,000 in both of these companies, your $10,000 with GameStop would be worth $100,000 now. It would just be worth a lot more. I'll do the math on that later. I wouldn't be 100,000, but it'd be worth a lot more, which is the point, right? And depending on when you bought GameStop, it could be worth $100,000, right? So let's look at a couple of things, and I kind of want to make sure we stay on track here. Let me pull up my notes. So hold on. And any questions, y'all, hit me up in the chat. We're all here. We're live. If you have any questions or any stocks you want us to look up right now, what I want to do is I want to start looking at stocks that you guys are interested in and just kind of give you my 2 cents on whether or not I think that stock is a good buy to enter and a good time to exit. I think that is the conversation that a lot of folks don't really know when to get out, when to get in. And that's what we want to talk about today. When do you enter and when do you exit? So we already know that entering can happen at any stage. Once you have a game plan where I'm investing in a company that I buy or a company that I support, there should be a portion of your portfolio that is designed to just invest in things that you enjoy. I enjoy gaming, so I should be buying GameStop stock, or EA or whatever. I should be purchasing that. I enjoy basketball, so buying any sort of Nike stock or things that are related to sports, I should be investing in that. There should be a portion of my portfolio that is specifically for the things that I enjoy. And I wouldn't say the majority of it should be that, but maybe 5% of your entire portfolio should be invested in things that you actually relate to, because that way, when something like this happens, you're going to look back and say, wow, I wish I put more money in there, but I'm glad I made a bump on that stock. So anyone has a stock that they want to talk about? Because I'm going to give you guys a few right now. So the next stock that I'm looking at right now, remember, we're staying in the small cap space, is this company. And we talked about this last week on Clubhouse. And I'm going to tell you why I believe that this company is going to do amazing things this year. Okay, let's close this down. All right, cool. All right, so you guys can see this company, right? Tilray. So it was down today, but I'm going to show you the 6-month chart on this. And I want you to see that. You see that? So this is also a small cap. I think it's at $2.9 billion of market capitalization, so it's tiny. Mid look and long-term look are positive, which is fine. It's in the cannabis space, right? Right now, they're saying that they've seen a bearish pattern detected. I don't care about that. That's irrelevant to me. So for all intents and purposes, we're looking at a company that was trading in September at $4, and now they're at $18, right? Where do we go from here? Is it a good time to get into this stock or not? Well, you've seen that they had a market high of $19, and now they've dropped down from that to $18, okay? Cool. One thing that you always have to look at to see what the trend is of a stock is looking at its previous lows and making sure that it did not hit its previous low. So in this stock right here for Tilray, the previous low on this stock would be 826. If the current price drops down past 826, that's your time to get the hell out, because now it's gone past its previous low, and that usually is an indication that it is bearish or that it is no longer in a profit-making space. Now, if it's rising, one thing that you have to always remember is that you're going to always meet resistance at previous highs. Okay, what does that mean? So on January 15th, this specific stock had a high of $19.70, right? I'm sorry, high of $20.09. That's its most recent high. So that's what it's battling against right now. If it goes past that number, which, if it does, that's an indication that it is now strong enough to continue in this growth pattern. If it goes below $8, which is the previous low, this one right here, actually it would be this one here, actually, 1131. If it goes below 1131, that's when you got to look out, because it might be on a bearish pattern. Bearish just means going down, bullish means going up. So again, with every company, you always have to have an exit strategy. When do I get in? When do I get out? Right now, I would see Tilray as, again, it's in a market space where it's in the cannabis space. They are owning a lot of market share when it comes to offering these products to individuals. And that economy is about to grow significantly. Regardless of what's happening outside of anything else, the cannabis market space is going to grow. And because of that, buying into companies that are producing and offering cannabis products right now at a discount of $18 is something that's going to make you money over the next 5 years. How much will it grow by? I don't know. But is it safe to say that it could double? Well, it already did. When I bought this on January 5th, it was $9. It's already doubled. That's 100% profit, right? From January 5th until now. Today is what, the 27th? Right? So 3 weeks, it's already doubled in price. Is that something that consistently happens? It does, especially with small cap stocks and industries that are going to grow and boom. This stuff normally happens. And it's safe to look at your investments and say, okay, if you're not really if you don't have a lot of risk tolerance, then if you got in at $9, leaving at $18 is a great time to go. Like, you've already made your 100% profit, which is more than you could ever ask for, and then invest in something that's more conservative. That's all good and gravy. But I'm going to ask you this, right? Unless you're trying to die tomorrow or in a week from now, why not see how far this thing can go? There are folks who invested in AMC and they pulled out, pulled out yesterday, pulled out a couple days, and it made the small gain before it did the pop. And it's like, if I'm looking at a company that made money for whatever the reason is, I'm going to ride that out until I see an indicator that it's going to stop. And what those indicators look like, you got to see, there's a moving chart that you can look at. And it is called an MACD, a moving average convergence divergence. I'm not trying to give you a whole bunch of jargon right now. So let's just look at it this way. There is a moving average that tells you whether a stock price is trending up or trending down. Plain and simple. We don't need the actual acronyms. We're going to talk like real people here. There is a moving average that tells you if a stock price is going up trending wise or going down trending wise. And there are indicators that tell you when it's actually reached a top and is now going down, or when it's reached a bottom, it's going up. There are actual things that you can pull up on a chart that will show you that. And if you DM me, I will give you the key on that, right? However, for us right now in this conversation, when you know when a stock is moving up, you can simply look at the candlesticks to determine whether or not it's trending down. You don't have to do a lot of math or magic. And if a stock pops by 300% in one day, it can drop by that much as well, depending on why it popped. These stocks are popping today because you're breaking people's options. Folks are shorting stocks and losing. So that's not going to deflate quickly. That loss is not. So in typical times, let's look at it this way. When a stock usually jumps that high, normally the next day or the following day, people will bet against it and it'll fall right back down. Like, it'll literally be like, oop, and then boop. Like, it's called pumping and dumping. Essentially, hedge funds do this all the time, where they pump up a stock's price and then they short it and then the price drops and they make money going up and going down, right? This is what they use. This is what they do. This is how they make money. When it happens to a hedge fund, though, it's a little different. When the hedge fund loses money, they get bailed out for more money, but the money that they've lost, they can't now hedge against that. They're too busy hemorrhaging. They don't have money to buy anything. So it's like, remember, the transaction is twofold. They're pumping it up, putting money in to pump it up, and then they're betting that it's going to go down, and then they're taking their options that it's going to go down, and they leave. Okay, cool. Both of those transactions require money. If you're betting on something going down and you lose, you now have less money to the tune of billions of dollars. You can't now pump anything up. You're just trying to save your shirt, which is why this price isn't going to fall. So, well, it's not going to fall immediately anyway for AMC or for Gamestop. So if you want to get in, you can, but just understand that the volume that happened yesterday and today is not natural. and you have to have a stop loss as to when you want to not play anymore, right? So let's go to, so I mean, we're on Tilray right now, but we're kind of going back and forth. So Tilray, for example, this didn't have a pump and dump situation. It's in the beginning and infancy stage of its actual move. This can grow long term, and it will grow long term. They'll have more sales, they'll have more revenue. Just so you guys know, let's look at the profile of Tilray so you can actually understand what they do and who they are. Tilray engages in the research, cultivation, and processing and distribution of medical cannabis. The company offers its products to patients, physicians, pharmacies, governments, and hospitals, and for researchers for commercial purposes, as well as compassionate access to clinical research applications. It operates in Argentina, Australia, so it's worldwide, Canada, Croatia, Cyprus, Czech Republic, Germany, Israel, Ireland, go on, all the names, right? So these guys have a huge network, right? Distribution-wise, they're everywhere. So when you're offering cannabis on a distribution scale that's global, especially when one of your largest markets, the United States, is now open to that, and so is Canada, you're now going to see an uptick in revenue. That's just going to happen no matter what happens anywhere else. This will happen, right? So with that being said, how many shares of this would you want to start consistently buying, knowing that the price just jumped 100% in the last 21 days and is not even started yet? It hasn't even begun yet. There's more room for this thing to grow. So for me, it's like when you see things like this, you want to start positioning yourself. And even if the stock price goes down, my thing is, if this price drops below its previous low, which if we look at the last 6 months, would be this right here. If it drops below this right here, 1131, that's your stop loss. If you, and you can set this up on your trading platform where you can say, hey, if the stock price goes below this number, I want to sell all my shares off. I would set it for 1131 because again, as long as it doesn't hit that low, I'm buying as much of this as I possibly can. Because long term, this will make me money. It already has, and it will continue to do so. Going back to AMC, let's look at our stop loss for that. Let's see what we would set up for that. If I was investing in AMC now, based on what the market has done over the last couple of days, let's go to 5 days. All right, so as you can see here, it popped on the 26th, Tuesday. Boom, 27 went from $4 to 17 bucks. Okay, one shot. Then the traders started shorting it, right? So it dropped from 17 to 11. Hedge funds made money on that. Just so you know, that's how they make money. They normally do that. They pump, they dump, and they drop, and they get both percentages up and down. Okay, cool. But then traders like the rest of us said, we're still buying this because we have a mission to bun you guys, right? So they kept being bought, and their shorts stopped. This would have fallen further if we didn't start, and we as in the collective of all the, regular investors like, mom and pop, if you didn't buy more of these shares, this would have continued to drop right back down to $4. But because all of you started purchasing shares on the retail side, all of those shorts started getting scammed, and those folks started losing their shirts. And that's why the price continued to pop even further up. And it'll continue happening right now because there's still more money to be made. Some of the companies that literally bailed out of their positions, if they didn't do that when they did that, they would lose even more billions. It'd be even worse. They had to cap their losses. So there are still hedge funds that are still in this. So they're going to be the ones that get screwed for the next, couple more days. But after that, there's going to be a lull if nothing changes with AMC. So where I would set my stop loss right now, if you're making money, I would set it, personally, I would set it at probably $15. If it goes below 15, I don't want it. And why I'm picking that number is I usually have a 10 to 20% stop loss set up. What that means is if the stock is $10, I set my stop loss to $8. If it goes below $8, if it loses 20% value within a day, I trade it. Now, if it loses 20% value over time, I'll move my stop. I'll move the stop loss. But if it's in one day, if it goes from $10 down to 8 or below 8, I'm selling out. That's typically how I move, a 20% move. And right now, if it's trading at $19, well, then 20% is 16 bucks, right? So you can kind of set it up that way where you're saying, okay, I'm going to see if it grows a little bit more. And if it does, I'm going to move my stop loss to make it 20% of whatever it grows to. That way you can ride this out, and then I'll show you how to deal the candlesticks so you'll know when to get out, because that's the key. When you see the candlesticks move, and I'll actually show you them right now. When I click on the actual chart, it'll pull up the candlesticks. Oh, will it? Oh, I gotta go to Finviz or something else. Well, I don't want to open that up right now, because we're kind of sharing our screen. Well, candlesticks are basically, it just shows you what the stock moved at that day. So it looks like a candle, and it has like a range of how far the stock went from lowest to highest during that day, and then where it ended up. So a candle, the way it works is like every day a candle is created, and the candle will be like, let's say this thick. Sometimes it's smaller, sometimes bigger, but it'll be this thick. And that'll be from the lowest point that it had that day, ranging to the highest point that day. That locks in the candle. That's how long the candle will be. So if it didn't move much that day, like Amazon didn't grow by much, its candle will be very tiny for today. Something like GameStop, their candle is probably like this, okay? And then the range is where it ended up at the end of the day. There'll be a little mark wherever it ended that day. So you can look at the candlesticks and actually start seeing the trend of how the range of the stock was that day to determine if it's actually changed in direction. And I want to share a screen that'll show you that. I don't know if I can. I might be able to show it to you. Hold on. Yes, I will. Okay, check this out. Let me go into our share screen. Okay, stop screen. I'm going to share a different screen. And it's going to be a window, Chrome tab. Moving averages, convergence. All right, so remember I told you about that MACD thing that I was like, don't worry about the technicalities. I don't want you to really be too concerned about it. But I'm going to show you the candles. This is what they look like. I'm going to get a zoomed one. Can I get a zoomed candle, guys? All right, these are candlesticks right here. Can I zoom in on this? Aha, perfect. All right, so do you see this chart right here? This is Investopedia. You guys can go on this and check it out. If you're not on my YouTube, go on, click on the link in the bio. You'll see the YouTube. You'll see the screen I'm looking at. It's investopedia.com and then candlesticks. If you just Google that, you'll see. So right here, if you see my mouse, this is a very long candlestick, and you see that it's red, right? Red means that the stock price was going down. Green means the stock price was going up. So one of the ways to tell when your stock is changing from losing money to making money is when the candles change colors from red to green. And when you're looking at candlesticks, it's very easy to see. When you look at this chart, if you're on our YouTube, you'll see, you can see this, the candles are red. That means it's going down. Then you see the candle changes to green. That means it's now changed and there's an upswing, right? So what I would say is that you need to follow AMC, follow GameStop's candlesticks and see what they're doing. And you got to be ready to make a move. If the candles are moving very heavy, which these ones are, look how big this one is, right? So long drop, a long going up, long going up. If it's moving in that direction, understand that typically when something goes up quickly, it could go down quickly. That's just a part of stocks, especially if there's no basis for why it went up. Fine. But if you pull up a candlestick for all of those companies, you'll know what it's doing just by looking at the colors of the candlesticks. So this is just one of the cheat sheets that you could utilize to determine whether or not it's time to get in or to get out of a position. The second indicator is something that is called, let me pull up my other screen here, the RSI, okay? RSI is the Relative Strength Index. It's usually on a scale from 0 to 100, okay? Now, when companies trade, typically, if you look at, an RSI is basically the price of a stock from its normal trading patterns, the highest and the lowest, right? And then anywhere in between just ranks on its RSI scale. Anytime a company on their RSI, and I'll show you these indicators. If you DM me, I will show you how to set these up so you can have your RSI indicator, your MACD indicators, and literally start investing like advisors. This is what we look at every day. We're not smarter than you. We just know more tools than you. And that's what we want to kind of shed light on these podcasts, on these lives, giving you tools as to know how to be an investor, how to be an advisor. What are they looking at? How do they know when to trade and when not to trade? I just showed you the candlesticks and you understand if something's red, chances are you can either short sell that, you can hedge that position, or you can just wait for that to drop by 50% and then buy on the way up. That is what a ton of investors do. And that's one of the strategies that I enjoy is like looking at a stock's price that drops by 50% or more and then taking advantage of that drop. That's just me. I love that trade. It's a swing trade. It's a beautiful trade. But you do it by looking at the indicators, right? So when I look at the RSI, if it drops below 30%, okay? When the RSI is below 30%, that's when it's been oversold. What does that mean? That means that people are running from that stock left and right, but they've run too fast. They've run too far. They've gone too far. So let's say with any company that you could think of during the pandemic, when it started last year in March, a lot of companies lost a lot of money on their shares because their stock price went from, let's say, $14 down to $6, right? The RSI would have dropped from 100 down to, let's say, 40 or 45. If the stock price kept going down to at least 30%, 30 RSI, if it got down that low, that means that you have sold too much, because where it's supposed to be is 50%. It's supposed to be anywhere ranging between 50% up and down, right? When it drops below that 50% down to 30%, that's when it's an opportunity to buy, because now you have access to potentially 50% gain if conditions correct. So there are these indicators that I'm going to teach you all directly and specifically on a separate class, because I want you to understand that there are ways to look at Amazon, to look at Microsoft, to look at Apple, to look at every company and realize, is it trading? Is it oversold? Is it trading in a space where I can then make some profit off of it? Or is it overbought? And now it's time for me to figure out how do I want to get out. That's a thing as well, right? So yeah, that'll be it. I would say on the strategy that we're talking about, where you're waiting for a company to hit an RSI where it's oversold, buying at the bottom of the candle is what you want to practice trying to find. So in this example on Investopedia, you see my screen. On this chart, actually, I'll do this on, I'll do this here. It's fine. Same, no difference. You'll see that this chart is dropping. And right here, you see that red candle turns into a green candle. At that point, that's when you realize that you've reached the bottom, because now it's no longer dropping. It's rounding out, and now it's going back into making profit. This is called a fish hook. Fish hook is when a company drops by 50% or more, and then as it gets to the bottom of its price point, it starts to round out, and then the price starts going up. That's the positive part. That's where we want to start looking to buy, get into the market at that space, right? So we're looking for the company's price to drop. As it gets to low and it's rounding out, that's when we buy. And let's look at our examples of a fish hook, right? Our fish hook example was, and I'll use this same screen. You guys aren't on our thing, man. You're missing out on all these screenshots. So let's go to AMC. 5 days, 6 months. Okay, so AMC's fish hook would have happened a lot longer ago, 5 years. So this would be an example of a fish hook here. So for AMC, back in March of 2017, okay? Nope, I'll actually just use this price here from June 26th. Okay, June 19th of 2017, the price was $23, I'm sorry, $23. It dropped down to $12. That's 50% drop, right? Just right there. Now, that's where that's the bottom of your fish hook. You would then start buying stocks at that $13 part right there and ride up the 13 to the 15. Little hook. And then you jump out, then you dump it. So you're going to make the money from 13 to 15, anywhere from 5 to 10%. That is a fish hook trade that people have been making for years. And it happens anytime a company's stock drops by at least 50%. You wait for the fish hook to generate itself. Then you start buying at that bottom, and you're only looking for 5% to 10% gain. This is how people used to make money for the last 20 years, right? Now we're in an economy where the fish hooks don't really work like that anymore. Like they don't really work this way, because there are things that can happen in social media, in the economy, with pandemics, that can make a fish hook actually extend past 5%, where you can actually make 100% profit. So right now, we're going to see volatility like this for the next, I don't even know how long. It's going to be a while where this is going to be happening, where you're going to see stocks getting you crazy rates, 100% gains in 3 months, 20% gains in 3 months, whatever. Like, you're going to see all of it, right? Be careful, because this ride isn't going to last the whole time. There's going to be a market correction. It will happen. I think we have a question on the screen. Hold on. It will happen. And when it happens, I want you to remember that you need to continue investing based on your expectation of 5 years. 5 years. For the next 5 years, no matter what the market does, up or down, you're going to be consistent. You're going to be the GameStop stockholder. You're going to be the AMC stockholder. You're going to say, hey, I am going to support this. I know that times look really bad right now, but things will get better. I want to see this move. I need you all to be like that. Because if you're like that, you're going to actually enjoy making a lot of money when news like today and yesterday happens. And this won't be the last time this happens. I want you to know that I think that this crowdsourcing, hedge fund smashing strategy is going to keep happening. straight up. When you give retail investors a tool like this where they know that they can make a killing off of making hedge funds pay, yeah, they're going to take advantage of that. And I've never even seen something like this. I've never seen anything like this before. This is the first time I'm seeing this. So get ready, as they do. Like, get ready for this. It's going to be a bumpy ride. But for those who are investing with us and investing the way that we invest, just remember that no matter if the price goes up, the price goes down, know what your entry is, which is the lowest price you can find, obviously. But also looking at the trend of the stock, investing like an economist, seeing where the actual sector is moving and moving to that, like how OEG went from biofuels and creating green technology to power water authorities. Now they're doing solar, and Aecon is teaming up with them. There's a lot of companies that are in that space where they're now ready to rumble. Invest in those things. And don't be concerned about the price right now. If it fluctuates, it's going to fluctuate, but it's going to trend up because, again, we are in a growth phase right now in certain sectors. Period, full stop. You're going to make a lot of money there. But just be aware that this thing that happened with AMC and GameStop, that is not natural. It's not sustainable. It's not normal, but it will be the norm over the next 3-4 months. I see this. I see this happening probably another 5 times before our next conversation. I think this will happen 5 times. So we have 7 days. Let's see if this happens 5 times. I hope it doesn't, because I kind of want our numbers to be accurate, but I'm gonna invest. So we'll see what happens. All right. So any questions, folks? Inquiries about JetBlue and Naked. Okay, so let's look at JetBlue. I think that JetBlue is going to be a winner long term for sure. And right now, what's their stock price at? $14? Yeah, they're going to be a winner. Let me change my screen out, folks. I want to use my Yahoo screen instead. Share screen. Okay, that way I can actually look at the screen and look at the YouTube at the same time. Just makes life easier for me. All right, folks. All right, make me small, make that big. Okay, so JetBlue. And this is what I want to do. Let's just we literally talk about stocks, talk about the ins and outs. Let's see what's going on with them. Let's have a conversation about getting in, getting out. That's what this year is all about. So JetBlue right now, we're going to our 6-month chart. Boom, it's been moving. It's been growing. So it was $10, $9 6 months ago in July of last year. Now it's $14. So you made a nice 35, 40% profit there. Not bad. Okay, cool. So now that you've made that, where do you go from here, right? This is a buy for me. It's not going to be a GameStop or an AMC or even an OEG, but as the pandemic narrows out and starts to slow down, you're looking at a company that is buying and investing in its planes, in its infrastructure, has added new routes, has one of the newest actual planes out there when it comes to technology. Their customer service has always been good. They're actually a well-run airline. And what you're going to see happening in the airline industry is you're going to see a lot of consolidation happening. I think that all of these airlines that aren't able to make money right now are going to get bought by bigger airlines. They're going to just buy their planes, buy the rights, and just add them to an extension to these companies. And that's what JetBlue's been doing. I mean, I've been flying JetBlue for a very long time. And as they started adding the Caribbean and adding South America, wow, like you're adding new destinations now that you didn't have when I first started flying you. That's a good indicator that this airline is actually opening up its wings, I guess, and flying to further places, increasing its ability to make revenue. So I would say that JetBlue is definitely a buy. I would set a stop loss for this one right here, $11. If it goes below that, I would set it for that. I'm out. But I don't think it will. And the trend doesn't look like it should. Let's go back a year. Okay, so JetBlue had a high of $21 prior to the pandemic. That is an accurate place that I think it should be able to get back to pretty easily. Just because, again, they're one of the few airlines that are going to make it through this, relatively unscathed. So it's easy for me to see JetBlue going to $21. Easy. So that gain, again, is a $14 to $21, $24 gain. You're making $7, 33%. That's not bad, right? So yeah, I think that that's a very reasonable play It will take you a little bit longer than you'd like, though. It's not going to be immediate. It's not going to be something that pops in 21 days like OEG or Tilray or any of those types of companies, but it will produce gains. And a part of your portfolio can be in something like this, and you'll know that's going to grow because JetBlue is showing consistency. Like it's literally fighting through a pandemic and still making money. Like that's a good sign. So JetBlue is good. What's the next one we got? Hey, what's going on, Matt? My boy Matthew. That's my guy. We grew up as best friends. That is my dude. What's going on, sir? Jack Flawless. What's going on? We got photographers in the house. Yeah, Jack Flawless. I hope you're investing up there in Canada. I hope you're buying stocks. Okay. We're gonna be talking stocks all month next month, and we're gonna get into the skinny of it. What's happening to Naked? Tootsie Roll. Okay, let's look at Naked. And all right, let's see what they're doing. Wow. Okay, we've got another crazy stock on our hands, right? Okay, everyone, check the stock out. So you know what we normally do. I don't care about one day. I'm gonna go back 6 months. So 6 months ago, Naked was trading at 51 cents. Went down 27 cents, 22 cents, 15 cents, 12 cents. This is not good. 7 cents. My God, 18 cents. And now it's flying up to $1.38. That is crazy. Now, for all those who've never heard of Naked, we do what we do. Let's go through the system, go through the process, right? So we go to Yahoo Finance, pull up Naked. We see what it's done for the last 6 months. We see it's in a growth pattern as of November up until now. Okay, cool. That looks like it could be a buy. Let's go over to see what Naked does. Profile. And let me widen out my screen here so you can see more what I can see. All right, so Naked brand group, limited designs, distributes and wholesale and retails women and men's intimate apparels, women's swimwear. The company offers its products under the Pleasure State, Davenport, Lovable, Bendon, Fairy Form, Naked, Vavoom. Okay, all of that, as well as through licensed brands including Heidi Klum, Fredericks of Hollywood. It sells its products through a company-owned retail stores in Australia, New Zealand, online channels, and wholesale partners in Australia, New Zealand, United States, Europe. The company was founded in 1947. Okay, so they sell lingerie. Well, I guess in the pandemic, when you're home, you got to spice things up a little bit. So, hey, I can't be mad at the fact that you guys are killing it. But I want to know what the news is saying about this. So, I can't go that way. Go back. Let me open up the screen a little bit more. I'm going to do some more research on Naked, but just based on what I'm seeing right now, I mean, how can you, okay, and this is what I'm saying. What's the risk? What's the real risk? It's $1.38 a share. What's the worst that could happen to that investment? Like, this is the kind of stuff that honestly, I would literally invest and buy 1,000 shares of this. 1,000 shares. Just because it's going to cost me $1,000, $1,300. Okay, cool. And I would just let that sit somewhere. I don't even care if it does well or not going forward. These are the kind of companies that if this goes from $1.38 to $5, your $1,000 just multiplied by 5, like that, right? That's the kind of growth that I want you to think on. Like, I want you to think of like opportunities like this and say, well, even though it's $1, it's 98 cents, it's whatever. The same thing that happened to GameStop and happened to AMC could happen to Naked, happen to any stock at this point. But it could also be based on their own sales and their own actual online, whatever. So I'll have to look deeper into them and see what they're doing. But right now they would classify in our category, we want small cap. This is a $322 million market cap company. So this is considered a small cap company. And yeah, I don't see this as something that's trending down over the last 6 months. It's been trending up since November, right? And kind of battling. So right now, I'm setting my next 5 days. Okay, 5 days. I would set my loss at 90 cents on this. As long as it's trading above 90 cents, I'm just going to buy more shares. That's it. And as it gets higher and higher, I'm going to increase my stop loss. So the way that you do that, again, I said 20% in any given day is too much of a loss for me. That's a downtrend. And if the candles are showing that it's red and it's dropping, you can then tell whether or not this is a good thing to do or not do. The performance outlook says that middle term, it's going to be a positive. Long term is a positive, but short term, it's a little bit, it's a negative. I'm good with that. I can wait 3 to 6 weeks to make double my money. So a company like this is definitely a winner. So vulgarity, that's a great one. I like that. What else we got? Oh, you're out here grinding, Matthew? Yeah, that's what's up, bro. Well, yeah, keep doing it, man. I appreciate everything, man. You guys just keep grinding up there. Everyone keep grinding. This is 2021. We all need to be rich. Thoughts on sundial growers. Okay, so Ali, SNDL, let's look them up. So again, naked, that's a thumbs up from me. I like them. Because again, stocks like this are the ones that you handle and you just kind of set them and forget them. Buy 100 shares of this and just let it go. Or buy 1,000 shares. I like the number 1,000. I like that. Because if it goes from $1 to $2, that's 1,000 to 2,000. And it's easy for me to do the math on it. So I like the thousands. I would buy 1,000 shares of this and just sit on it. So Ali, let's get to yours. Sundial growers. Well, automatically, without even looking at the symbol, I already know that that's going to be a company that's going to grow, just based on the fact that the administration, the administration in the U.S. is really big on solar. So solar, green tech, all that stuff. That's really that's their wheelhouse. So let's look at them. Do what we normally do. Go to profile, check them out. So Sundial Growers engages in production, distribution, and sale of cannabis products. Oh, this is cannabis? Okay, cool. When it says Sundial, it tricked me. And adult use market share, again, so this is, again, the same thing that applied to Tilray applies to Sundial. This industry is growing. This industry is at its infancy stage. Any company in this industry is going to grow, regardless of what it is. As long as it's run well, it's going to grow. And if it's run poorly, it'll be bought by other ones that are run well. So in the cannabis space, there's really no losers here. So let's see. Sale of cannabis products for adult use market also involves the production, distribution, and sale of ornament plants and herbs in the United Kingdom. This company offers its products under the Top Leaf, Sundial Cannabis, Palmetto, Grasslands brand. Sundial Grows Inc. was incorporated in 2006. It's headquartered in Calgary, Canada. I would buy this too. And at 60 cents a share, you cannot go wrong. These are the kinds of companies that you need to get into right now. This is a small cap company. This again, and Ali, that's a great find. Over the last 6 months, you know what we do. They've been kind of choppy, but I guarantee you after the election, November 4th, boom, price went from 17 cents up to 38 cents, dropped back down again, but it didn't go past the previous low. Are y'all seeing this? You guys better be on my YouTube and watching this. This is what you have to look for. Look at this. So this is Ali, perfect case study. So November 4th, Joe Biden wins. Democrats are in office. Cannabis is going to be legalized across the country. Boom. At that point, as soon as that happened, it went from 17 cents, went to a high of 45 cents, and then was shorted and dropped back down to 25 cents. But you recognize, knowing our strategy, as long as it doesn't go below the previous low of 15 cents, or even here, 17 cents, as long as it doesn't go below this, it's in an uptrend, which means you don't sell. You keep buying more. And if you did that, you would have been handsomely rewarded when it kept dropping down to 25 cents, 26 cents, 24 cents. You kept buying more because, again, it didn't drop below 17. So you know that it's not in a bear market. It's not losing money like that. It's still in an uptrend because it's above the previous low. You would have been handsomely rewarded again with a pop to 75, 65 cents, $65. Again, don't sell, keep buying more. The next low that you have to look out for, it went down to 43 cents. Your previous low was here, 28 cents. As long as it doesn't go below the previous low, it's in an uptrend. Keep buying more. Boom. You bought more, you'll be rewarded again at 68 cents. And this is going to keep happening. Now, it's hit a place where it's meeting resistance. As you can see by the fact that it keeps getting to 80, going back down, 70, going back down. Now it's back down to 68. This is a resistance point. This is a time for you to continue purchasing because, again, where it dropped to right now was 56 cents, which is still higher than the previous low, which is right here, 55 cents. It just missed it by a penny. The previous low was 55 cents. Right now it dropped down to 56, which, again, it didn't cross past the previous low. As long as it doesn't cross past the previous low, you keep buying more because it's in an uptrend. So I would buy more shares of this. Simple. So folks, follow the patterns. All right, so I got to go. Thank you so much for joining me, guys. I appreciate each and every one of you. I think Instagram's going to chop us off. YouTube's still going on, so if you're on our YouTube, just join us on there. Click the link on my bio. We're going to be hitting a few more on here. Would you buy Jemai now? Chevy, yes, I would. Jemai is going to run to about 100. So if you are in July stock and you're seeing that it's fluctuating, this is your chance to buy more shares before it jumps up again to $80. So don't get caught scratching yourself. You know, a lot of times what happens is you get caught, oh, the stock went up from $2 to $60. Okay, it's going to 100. What do you like? You have to keep buying. This is your opportunity, because when it's 105 or 300 or $400, you're not going to be buying as many shares right now. So get in as many as you can, and focus on some of these smaller companies that are 50 cents, 60 cents, $1.21. Put some money into that, because those are the ones that are going to be balling over the next 5-6 months. All right, folks. Oh man, this was a good night. This was a good one. This was a good one. So everybody, we're going to be on Clubhouse at 9:30. If you're joining us, please join us there. But for now, Instagram, I want to say what's up. Thank you so much for joining us on our Stock Wealth Wednesday. We'll see you guys next Wednesday. And again, just keep investing and be aware of when to get in, when to get out. All right, stay safe out there, folks, and I'll see y'all later. All right, peace out. All right, folks. Sorry about that. I'm just gonna post one of these pictures here on IG. This camera roll stuff is annoying because you got to pick which picture you want. It's like, okay, whatever. Let's pick one that's there. Just post that. Okay. All right. So, folks, thank you for staying with me. I appreciate y'all. I can take these out. Don't need these anymore. All right. So, what you guys find that useful? You guys find that rewarding here? Sundial Grow is a good one, man. We had a couple of really good stocks to think about. So hopefully you all took time to look at these options and understand that this is what we need to do in 2021. You know, start looking at companies like Sundial, looking at companies that are in the cannabis space. I'm 100% on for cannabis anything. It's going to move, it's going to run, it's going to go up. All right. So folks, thank you so much for keeping us in your thoughts and joining us on our YouTube. We're going over to Clubhouse at 9:30. So I will see you all over there, and tell your friends about this one. Let them know that, you know, we're giving out, you know, tips and tricks and ways of how to invest properly. You know, this is what it's about. You know, we got to know that the GameStop stock movements are not real. We got to know that, you know, there's some fundamental reasons why we can still invest in it now, but just have a stop loss set up where you're not going to lose more than 20% on that stock price that it's at right now. Right. So, yeah, until next week, thank you guys for joining us, and I will see you all on Clubhouse at 9:30. All right, y'all. Later. Take care now. And don't forget to like our channel, follow us on Instagram, YouTube. We're on Facebook as well. Just follow us on Twitter. And as we start doing these lives, we're going to be actually posting these without telling you. So hopefully you're following us, so you'll get the notification, and you can be on the first train of folks that get this information. All right, folks. Thank you so much, and we'll see you guys next week. Take care.